Yeah, so Colin Ross, who's on the call already, he's with Kinsale Spirits, which is the whiskey company.
Hey,
Um,
yeah.
and then there's Paul Simpson, who's the commercial director of Dairy Concepts. But they'll need no introduction
Yeah.
themselves. So what I do, guys, I can see that we've got quite a few people registered already. So what I might do is I might just get started. I suppose firstly, just to say thank you for those of you that have made the trouble of attending today's presentation. We have actually over 100 people registered, which is phenomenal. As I said, this is the fourth of a series of 4 that we've done over the last 4 weeks. And we've had great, I suppose, take up. It seems to have fallen in line with maybe people working from home and wanting to get their finances in order. This particular session, which is a standalone, is specifically in relation to this tax saving opportunity that a lot of people actually aren't that familiar with, but it has been around since 2011. I will go into it in a little bit more detail, but just to premise against that. As you may have caught at the start, we're not going to take any questions today. Myself and David Looney, who are the two kind of, I suppose, financial advisors working alongside Tracy and Rebecca in Alpha Wealth, we'll do follow-ups and one-to-ones perhaps, and we're happy to answer any questions, as are all of the individual speakers of the 3 companies that are on today's call. So basically, just to tell you a little bit about Alpha Wealth, for those of you that may have not been on a previous session, we're an independent financial services company. We have an office in Little Island. We have a small presence in Dublin, and there are 6 advisors. I think I lost you there for a moment. I hope you can hear me again there. So I was just saying that we're an independent financial services company. We have 6 people based in Little Island, and we have basically provide free financial advice to individuals. We don't charge for our advice. The way that we're remunerated is through the product providers that we place business with. We are a low-cost broker. When I set up Alpha Wealth 6 years ago, I insisted that we would be always a low-cost broker, and that's the way in which we've been able to compete and to grow in this industry. Specifically in relation to today, the EIIS opportunity, which I'll talk about, or the tax-back scheme, it is a very low-cost scheme. I think it's a real money for jam opportunity for people who are eligible, and I'll talk to you briefly about what the qualification is now. So in essence, this scheme, which is available to individuals only. So for example, if you are married or if you have a partner, they potentially can do this scheme themselves in their own right. It might also qualify perhaps for a business colleague that you may work with. And specifically, the qualification is that you must be eligible for tax at the higher rate in the calendar year of 2020. The general rule is that you're earning over 42,000 a year, because if you're singly assessed, your earnings are typically cut at 37,000, and you need to have at least 5,000 euros of tax at the higher rate. Now, if you happen to be taking your spouse's credits, you may be able to earn up to 47,000 a year, and that would therefore mean that you typically have to be earning more than 52,000. But for most of us, I suppose, I'd like to think that there will be an opportunity. If it's not this year, then it might apply in future years, because this scheme will be around for a number of years to come. Pascal Donoghue, in the budget last year, breathed life into this scheme. Essentially, what he did was that he put the government's kind of resources behind this, and he increased the amounts that people could actually put into the scheme. Typically, the amounts are very, very generous. So depending on how much somebody is earning, the fact is that the ability to fund for the scheme can be made very, very generous. So now I hope you guys can see these slides. So in essence, what the EIIS scheme does is it allows you to offset not only your earned income, but also rental income. So for those of you that may have investment properties of which you are generating rents for, this is also eligible for that, which is an advantage over pension schemes. Pension schemes can only offset income that you get paid by a company. That doesn't apply in EIS. It actually allows you to shelter all income, and that includes dividends and also pension income, believe it or not. There are people who are in pension years that are using this scheme as a legitimate tax shelter. If you look at the Revenue website, and we can share with you the details from Revenue, it also gives more information about this scheme. So today, specifically, what I want to do is I just want to talk to you as to 3 companies that are offering this opportunity. They are specifically Dairy Concepts, Emex, and Kinsale Spirit. I know the managing directors and the commercial managers of each of these companies quite well. I must say I rate them very highly, and I trust in them. And bearing in mind that there will be more than likely over 100 companies that will apply for this scheme in the calendar year, you need to be very careful about who you might look to use this shelter for, because there are some very poor companies out there that I'd be very, very wary about. So as a independent financial advisor that's regulated through the central bank, Alpha Wealth's role in this is to basically pick and select the best companies in this area and give you the opportunity then of availing this in a very simple and efficient manner that doesn't require the use of an accountant. I myself have worked in an accountancy office for 6 years, and it's very, very simple in terms of how this scheme actually operates. You avail of the scheme in 2020, and you get this 40% tax relief early in 2021. So without further ado, I'd like to introduce you to Paul Simpson, who is the Commercial Director of Dairy Concepts. Hello, Paul. Can you hear me?
Okay, I assume you're going to drive the slides. I can, yeah.
Great.
Can you hear me okay?
Yes, we can.
Yeah. Okay, hi everybody. I'm Paul. I'm the Commercial Director at Dairy Concepts Ireland, and Tom, who's the CEO, is also online. We co-founded the business in 2012. We've become a leading innovator in the global dairy snacks market. Our aim is to create a new Irish dairy success story, leveraging Ireland's global advantage and reputation in the dairy industry. We see a huge opportunity to create a world-first portfolio of handheld dairy snacks. We have a very experienced management team, all in our 50s, with Tom and I based in Ireland and Arnaud and Richard based in France. Tom is the CEO and a serial food entrepreneur. He and his brother started Freshway Sandwiches in 1999 and sold their business to Kerry Foods for a very successful exit in 2002. I've worked for blue chip food companies, and in my previous role, I headed up Hovis Ireland. Arnaud and Richard are ex-Kerry Foods senior executives who launched a cheese strings brand in continental Europe, but they now have annual sales of 100 million euros. You can go on to the next slide, please, Nick. And go backwards, Nick, to the slide number 2.
Yeah, that should be showing up as our innovations, Paul.
Yes, correct, yeah. Okay, so our first product is a range of chilled dairy bars in an easy to open pod. It's a high protein, all natural dairy snack, which, as you can see from the photograph, are handheld and they're perfect for lunch boxes and on the go. They're a healthier and more portable alternative to the existing Fruity brand name, whilst in France we use the Tapafan brand name. And I'll go into these in more detail on the next slide. On the right hand side, you can see crunchy cheese, and this is our most recent innovation. This will be new news for anyone who invested in our business last year. But whilst the COVID-19 pandemic caused some delays in our plans for Fruity and Tapafan, we took the opportunity to bring forward and accelerate the development of this product. And by carefully dehydrating cheese in a very controlled manner, we're able to create crunchy puffed cheese that delivers 10 grams of protein in a single pack. This has been 2 to 3 years in the making, and whilst it won't be ready for launch until next year, by adding it to our portfolio, we now have sweet and savoury alternatives, with one refrigerated and short shelf life, and the other is ambient and long shelf life. So a good balance to our portfolio. On to the next slide then, Nick. So in terms of market opportunity, consumers globally are looking for protein-rich snack options in new and more natural forms. In France, there's a meal occasion known as the goûter, which is eaten after school by children and consists almost solely of sweet treats. 85% of children in France enjoy goûter at least 4 times a week. And whilst the French government recommends that every goûter should feature dairy, only 25% actually do. And this is due to the limitations of existing products. In Ireland and the UK, 75% of school children and teenagers consume packed lunches, with many more taking snacks to supplement their school dinners. The market for dairy snacks is valued at 420 million, and with very few dairy snacks suitable for teenagers and adults, because existing products are all covered in cartoon characters. The crunchy cheese opportunity plays into the UK protein bar market, which is now worth 980 million per annum, and the market is becoming much more mainstream. The majority of products are sweet and with a long ingredient list, so there's a significant opportunity for a great tasting, all natural savoury alternative. Our short-term focus is all on Tapafan in France, and we're currently in dialogue with several major retailers. We expect to get our first listings in September, October this year, and are conservatively projecting brand sales of 7.4 million by 2024. The launch of Frucci in the UK will follow when there's certainty around the Brexit situation, and we're also already thinking about other European markets. In total, we're projecting brand sales of circa 20 million by 2024. And as a dairy technology business, we expect an exit opportunity to be based on circa 3 to 5 times brand sales. Next slide, please, Nick. In terms of our business model, we're a disruptive, consumer-led and technology-driven business with global ambition. Whilst we focus there on brand sales in Europe, we're also hoping to extend our presence to the rest of the world via a franchise-stroke licensing model. This is very similar to how Yoplait internationalized and would include upfront fees, ongoing royalty fees and sales of unique ingredients. If you look at the pictures on the right, you'll see that we've built a great manufacturing operation in Moore Park, and we'd be happy to show anyone around who's interested. In summary then, we have world-first products that are on trend with a huge global market opportunity. And to put that opportunity into context, Cheese Strings has sales of 100 million in Europe alone. We also have a strong team, a scalable business model and an exciting exit opportunity. Investment in Dairy Concepts is for uncapped ordinary shares and it's the same risk and reward as us as promoters. Thank you for the time, and I'll hand you back to Nick.
Thank you very much, Paul. So I'm just going to go into the second company today, and I suppose I should have maybe premised this by saying that the three companies that are going to be kind of, I suppose, showcased today, they are the companies that provide the opportunity for this tax-back saving. So it is necessary that you use one of these companies in order to avail of this relief, which we'll discuss towards the end of this session. And as I said, the advisors in Alpha Wealth can go through with you, but it's important that you get a sense of what the companies are and obviously, you know, what the business model that they're running into. So I'll introduce you now to Simon Kelly, who's the joint owner of EMEX.
Hi guys, thanks for the handover, Nick, and well done, Paul, there guys in the dairy company. That looks really interesting. We're a bit different to dairy. We're a software business. We're a cloud-based software company, and EMEX's product is kind of indirectly feeding into what Paul and Tom there do. We work for clients around the world and helping companies who produce and manufacture goods or mining to manage their health and safety compliance, manage their environmental compliance, and sort of feed into their reporting systems. And every company in the world has to have a system like EMEX to enable them to kind of manage these processes nowadays on software, whereas in the past they would have been managed on paper-based systems or filing-based systems. So EMEX is essentially a global software company. We work with some very high-value brands at the moment, and our plan here with Nick and this EIIS investment is to expand our business very much in the USA and scale our business very rapidly on the foot of our existing customers. To give you a flavour for the customers we currently work with, in Ireland here, you're all familiar with Applegreen. So Applegreen run all of their safety management systems on the EMEX software platform, and they would pay us roughly 20,000 euros per annum. We also work with brilliant companies here like Irish Life. We work with IKEA in the Middle East. We work with massive mining companies in Russia and mainland Europe called Lafarge Holcim, Cas Minerals, ERG. So very much any company in the world who's got a high number of employees and a high number of dangerous or regulated activities have to run that process through a system like EMEX. As a software company, we distribute our product over the internet like a classic SaaS company, and that makes us really valuable from an exit point of view. Companies in our sector regularly trade on between 6 and 10 times revenue, and our plan with the overall company is to build this large global software company and ultimately exit into either a trade sale for an existing software company or possibly list a company on NASDAQ in the end. So we have fantastic ambition to build a business. We're really supportive of this government tax incentive around investment because EIIS enables people who work in PAY in Ireland and investment and rental income to sort of get the same kind of tax breaks that Apple get. Apple had a huge result this morning where the Irish government and Apple have won the tax case against the European Union. So, these are the same kind of tax incentives that you guys can all benefit from personally in the same way as the multinationals do here in Ireland. And pop the next slide there, please, Nick. MX, the EIIS software sector is really interesting in that it's kind of every company in the world. So when we're out chasing customers, which is every day, we're speaking to companies in Africa, Europe, the Middle East, Russia, America, South America. So we're an extremely global business. And that's obviously brilliant and fascinating from our point of view, but it gives us a huge amount of clients to deal with. For example, we deal with Dangote Cement in Nigeria, who's the largest cement company in Africa. So really, as the world globalizes and everyone's forced onto similar kind of standards, they're all forced into this net where they can become a potential client of ours. Driving that kind of regulation, it comes from consumers ultimately, which is that consumers require their suppliers to be able to authentically establish they're producing, safe goods in an environmental way, they're being fair to their employees, and they're not, working at a sweatshops in Bangladesh. And that pressure to get the whole supply chain being able to prove their compliance really means that the top consumers in the world who are buying Apple smartphones are forcing Apple to verify where the copper and the cobalt from the batteries comes from. So we get this brilliant pressure coming down from the modern world and consumers, which makes our customers like Kaz Minerals in Kazakhstan be able to verify up to Apple that the copper they extract from the mines in Kazakhstan is safe, it's ethical, it's environmentally sustainable, and ultimately Apple then report that out to consumers saying, we're making good phones, we're not destroying the planet. So that pressure is increasing every year, and that really brings more and more potential corporations in as our customers, and that lets us drive our revenue from about 2 million this year up to 20 million by 2024. We, with your investment here in a global leading software company in the sector, active for the exit to take place, which enables to close off. You guys have made an investment, you've stayed in the transaction for 4 years, and then you've got your capital back plus the return, and you've got this fantastic tax break. So very much, we think it's a great way for us to raise your gross capital in the future. Transact years. So thanks for listening to us, guys, and hopefully I can share my details out. Thanks, Nick.
Great, thanks very much, Simon. And finally, I'm just going to pass you on to Colin Ross, who's the Managing Director of Kinsale Spirits. Hi, Colin, can you hear me?
Colin's on mute.
Yeah.
Hi, Colin, can you hear me?
Yeah, I'm unmuted from my side anyway.
Okay, yeah, we can hear you now, I think.
Just before I get into our own business, I think you've would have crossed paths previously through FoodWorks on another project I was involved with a few years back. So it's great to see familiar faces also.
Very good.
So ours is again a very different business to the other day. Successful multi-award-winning gin, Kinsale Gin. In the last couple of weeks, we've achieved our first whiskey, red Ireland whiskey, and things are looking very interesting in our business area. As you're probably all aware, just current circumstances. The management of the company have nearly 100 years experience, alcohol brands since my early 20s, distillers, restaurant owners, worked in the area for a long time. So we're familiar with our products and what we've already lodged our planning permission. We've signed up contract supply agreements with both West Cork Distillers and Great Northern Distillery for whiskey and gin. And our plan is to build brands, export them globally out of Ireland, also build our own production. And that's what we're currently funding. So last year we did a very successful EIIS raise also, and Nick and Alpha Wealth were great help in that. And we started our plans rolling, started to lay down whiskey. As you're probably aware, it takes a long time. It's a business where you have to build your stocks and you have to commercialize in parallel. So we've chosen to go on a dual strategy where we build our stocks of our own whiskies as we build our distillery, but also secured supply from reputable suppliers so we can commercialize immediately without having to wait for 3 or 4 years before those stocks are matured. The plan is, as soon as things calm down a little, to start work in the States. We've already secured our import licenses. We've had all of our labeling, etc., verified, and we have our distributors selected for the initial launch. We have product going to China the week after next, and we have huge interest from a large Australian retail chain as well. So what we need is to raise some money to not only build our distillery or visitor center down the line, but also working capital so we can ensure that we can supply the appropriate orders. It's great to get orders, but you also have to be able to make the product and supply the product. And with any product, especially a high value product per unit like whiskey, you know, you've got a lot of cost up front before you can sell the bottle. You've got to secure your bottles, your product, and so on and so on. So, you know, if you're talking to one of these major groups, they're looking for minimum order capability of 10 to 20,000 bottles per chain. So that takes a little bit of working capital, and that's principally what we're embarking on at the moment. We've also employed the services of financial consultants, Robert, Nathan, who have helped us build our business plan. And in parallel with the EIIS opportunity, we're doing a fundraise for equity as well. So we're actually talking to people like Enterprise Ireland, talking to groups like Davy about their investment products as well. So the plans are very ambitious. We plan to be exporting to at least 5 countries within 18 months. We plan to work off the back of the massive efforts of the likes of Irish Distillers and Jameson brand. We're going to be a smaller player, obviously, but we're also a premium player, so we're not chasing the same market segment as everyone else. The opportunity we have is, again, as usual with the EIIS, is over 4 years, including the 40% tax back for the, if that's your marginal tax rate, we're offering another 25.9% on top of that over the 4 years. So it's a fairly attractive way to put your money into a business that is, let's say, pushing at an open door. There are significant opportunities for Irish whiskey globally, across Eastern Europe, across Asia, and obviously North America, which is the single biggest market. And the beauty of it is the value of the product itself is growing. So whiskies laid down, whiskey in casks, that's appreciating over time. So as businesses go, we're all aware certain businesses have certain attributes. The whiskey business, not only is it a growing business, but it's also, as a former boss of mine when I worked for Heineken used to say, it's the fun business as well. And it's important that people have, you know, when they do all the serious things during the day, they have places to enjoy their leisure time and perhaps relax with a nice glass of Irish whiskey. Thanks, Nick.
Thanks very much, Colin. So just to recap, and thank you very much for your input, guys. I think the 3 companies that have been showcased today are fantastic. I hope that you got a sense of that just by listening to the various kind of, I suppose, snippets. There is more information available, and again, myself and David are in a position where we can provide you with the prospectuses for each company and explain the opportunity in more detail. But just to put things in very simple terms, For an individual that, as I said at the start, is paying 5,000 in tax this year at the higher rate, which you've already probably suffered, bearing in mind we're almost at the half year, you have the ability to offset that by making a 5,000 euros investment into one of these 3 companies. And by doing that over a 4-year period, the Irish government are going to give you back 2,000 euros early next year. And the companies themselves will all give you a return of somewhere between 25 to 40%. And each of these companies has pros and advantages over others, but they're all very, very different. And in my opinion, they're all warranted to due consideration. Somebody might have a preference over one company over another, and that's absolutely fine. I like all 3 equally, I have to say, which is why I've asked all 3 to join today's call. With respect to what that means is that if you think about it, that's a 3,000 euros net investment, of which you're looking to get a return back of about 6,000 euros. It's a double your money scheme, and it doesn't happen in everyday life. This is an opportunity that is available to individuals. And all I say to people is, look, you may not have the monies necessarily in your bank account now, but you have the next few months to try and build them up. And if you don't do it this year, you may have other purposes for your cash, you may have assigned it elsewhere, then you have next year to look at this. And these companies will be around. They're proven, and in my view, they're going to be available for people to embark upon over a series of time. The last thing to say to you is that they are providing an incentive for the next 2 weeks. I've asked them to kind of come on the call today and to offer a bonus or an incentive for people to act by the end of July before, you know, waiting for a few more months. Now, obviously, these schemes are subscribed on a basis that, you know, when they're full and they've raised their allocation, that's it. So I would encourage people to look at these as early as possible. But as I said, David and myself can go through as to the advantages of why somebody might want to make an investment. They've all given something beneficial to clients if they are looking to make a decision early, obviously just in terms of getting the thing kind of moved along. So finally, I'd like to just thank you for your time, and just to say that the video today and the slides are available, and we look forward to speaking to you. In terms of Alpha Wealth, there are other areas that, as I said, that we will be conducting seminars too, including potentially following up on the EIIS in September. And I'd like to thank you again for your participation. Enjoy the afternoon. Thank you, guys.
Thank you.
Thanks, Nick.
Thanks, Nick.
Thanks, Nick. Thank you.
Thanks,
Thanks,
Nick.
Nick.
Thanks.
Thanks.
Thank you. Bye now.
Thanks.